Well, I'm hoping to share with you some inspirational use cases in the wild of what Nasdaq is doing with emerging technologies to disrupt fintech. But I'll start with a brief overview of the work that I do at Nasdaq and about Nasdaq itself. So these are the areas I'm responsible for application development within all of our marketing-facing web properties, a lot of content management systems. And Global Corporate Solutions is a portfolio of applications that we have built over time at Nasdaq to help companies successfully enter public markets. So think of things in terms of really understanding deeply your investor base and how you reach out to them and target them and optimize that, as well as enabling board and leadership and very highly secure collaboration across those constituents. And lastly, corporate systems, which is what I always classify as all the systems that most employees love to hate. So everything that you might use for your human resources and your financial systems, expense management, and that type of thing. So who we are, Nasdaq, we've recently refreshed our corporate strategy, and I'll talk a little bit about that, looking towards the future. But we really want to create better and more open markets worldwide and make markets frictionless and democratized for participation. And I'll break us into 3 high-level categories. So the first category in the green box, providing more transparency, so helping people understand markets and how markets behave. And then in terms of participation in markets, market services, and the ability for companies to list and access public markets is the second major bucket. And then offering dynamic and flexible platform as a service customer solutions. So this I'll focus on quite a bit, but this is our market technology business, which is we power about 100 markets worldwide right now, and these are all relatively bespoke and on-premise markets in places like Singapore and Australia and many more, approximately 100. But that's something that we want to explode to thousands of markets as we modernize that business. So I think the headline here is that we've been leading innovation in markets going back to 1970 when the first electronic exchange was introduced in 1971 and got rid of the trading floor. And the same year that the Intel microprocessor was invented. And then in the 87 here, the first derivatives exchange becomes the first exchange to go public. And then into the early 2000s, we merged Nasdaq with OMX here in the Nordics and followed on with acquisitions of Thomson Reuters, investor relations, public relations, and multimedia businesses. So I think what I'd like to focus on here is that we've been innovating for dozens of years in global markets, but we've been quite acquisitive. And so when I say acquisitive, we've really grown a lot by acquisition more than by internal technology innovation. And that's something that we are shifting as we move forward as a company. So with that, we have a technology radar here that are some of the technologies we see shaping disruption in financial services today. And I will focus on mainly 3 of them: cloud services, blockchain, as well as machine learning, machine intelligence. But I'll draw in on some of the other ones as well, since there's quite a bit of overlap. Okay, so now I'm going to make you all feel better about what you know about cloud. I think a lot of people didn't raise their hands on machine learning, but this next one, I'm going to show a short video clip that is an actual government official. I won't say which government, but he's talking about the risks of the cloud. And of course, in financial services, the risks of the cloud are top of mind. But what I love about it is it might be hard to catch all the audio, but he's talking about how if it rains, then the cloud is at risk, and the wrong person could get convicted of a crime. So enjoy.
उससे आप सारा सॉफ्टवेयर और आपके सारे डॉक्यूमेंट्स आ जाएंगे। अभी तक ये स्टडी नहीं हो पाई है मनीष जी कि क्या बारिश के समय, क्या जब अंधड़ आता है, क्या इसके अंदर एबरेशंस आ सकती हैं, अब एबेरेशन मान लीजिए आपने ये यूनिक आइडेंटिटी कार्ड बना दिया एक गरीब का बेचारे का, उसका कभी टेस्ट नहीं हुआ बार बार जी, उसने उस समय दे दिया। अब क्योंकि ये जो यूनिक आइडेंटिटी कार्ड बनाएंगे ये उससे नहीं बनाएंगे, क्योंकि आपको जाना पड़ेगा जंगलों के अंदर 100 मील दूर जाके। वहां पर आपने जब बनाया तो उस समय क्लाउड ठीक था, या आपने जो क्लाउड सीड किया था, इसका एक पर्टिकुलर क्लाउड सीडिंग होती है, जो एक क्लाउड सीड किया जाता है ऊपर, वो क्लाउड की एक सिचुएशन थी उस क्लाइमेट में। आपने जब उसको चेकिंग करना शुरू किया तो जहां पे चेक किया वहां पे क्लाउड, उस समय बारिश हो रही थी, वो फॉल्ट दे रहा है, वो कहता है ये तो आदमी वो नहीं है जो अपना ये दे रहा है, आपने उसको गिरफ्तार कर लिया। अगर मान लीजिए 3% लोग भी गिरफ्तार होना शुरू हो जाते हैं, या 2% भी होना।
So what I think I loved most about this is the poor guy who's interviewing him and is looking really serious. But I think the lesson is, even if you know nothing about a subject, if you just talk about it with authority, then yeah, maybe you'll convince someone of your case. But we've learned a lot since 2011 about the cloud. So I'd like to just, I was at the Amazon reInvent conference in the US last week. I think it was attended by about 30,000 people the year before, and it was attended by about 50,000 this year. So that gives you some idea of the momentum of Amazon Web Services. It represents about, I think they're about 4.6 billion this most recent quarter, with a margin of around 26%, which is obviously much higher than the rest of Amazon's business. But the growth is obviously phenomenal. Worldwide, cloud is about a $260 billion per year, US dollars, market, and expected to grow to about $420 billion by the year 2020. So quite phenomenal. And I wanted to just walk through a quick typical evolution of companies, especially risk-averse companies like Fintech, towards the cloud. So often companies will start with disaster recovery workloads, and we have some applications that are doing that, as well as development environment workloads where you don't have real customer data involved. And then often to a lift and shift model, because in financial services, we've been around for a while, and we have a lot of legacy systems that weren't built for the cloud, like many other established businesses. So part of our challenge is, how do you abstract or strangle those back-end systems so that you can still innovate quickly? And then with the idea of that strangler pattern, moving to cloud-native design architectures, with the idea that you can innovate much more quickly. So, what is the why of cloud? I think most everybody in this room would know that, but really it's about innovating more quickly and getting products to market more quickly. It also, the platform as a service offerings that companies like Microsoft and Alibaba and Amazon are coming up with, they really do level the playing field for companies to innovate, and that's pretty scary. Like, I think you'll hear many companies say, I'm not worried about the other big banks, or I'm not worried about my other competitors that power global financial markets. I'm worried about the people that are in the garage coming up with the next interesting market concept. And that's certainly how we feel in where we participate in global capital markets. So with that, in terms of what we're doing to give a flavor of what's happening within global capital markets, we are looking to, as I said, we power about 100 markets worldwide, but those are all located on premises for those customers. And what we're working to do now is to shift to cloud-native architectures where we could deploy markets anywhere and everywhere. And we can think of powering new markets. When I said we want to be able to power thousands of markets, not hundreds, you might say, well, how many countries are there in the world, and how many different types of vehicles and markets are there need for? So how is the market even that big? But we're thinking about democratizing and inspiring new markets. So things like airline tickets. There are some creative ways to buy airline tickets, but if you could create a more dynamic two-sided market, you could perhaps get better use of the inventory for the actual airline companies, and you could get better prices for the consumers if you just had open two-sided market APIs that anybody could plug in to the markets that they are interested in creating in any location. So it could still be on a customer's premises, or it could be deployed in any public cloud. So that's what we're working on doing at Nasdaq, and I'll play a short clip here that kind of expands a little bit on that in terms of the types of markets we want to democratize and inspire globally.
When money disappears and e-currencies are all that remain, we'll be there. When countries need to build markets from scratch, we'll be there. When industry and economy needs a partner they can trust to manage their market's infrastructure, we'll be there. When real estate, healthcare, insurance, and advertising need secure trading platforms of their own, we'll be there. Wherever the world goes next, we will be there. Because we are born of markets. We are built for markets. We are remaking markets. We are tomorrow's markets. We are Nasdaq.
All right, well, I'd like to switch gears a bit and talk about some of the innovations happening with blockchain and how we see and are using and innovating with blockchain technologies. So some of the main values I see from a blockchain perspective is the standardization of reconciliation. So you probably hear a lot about how assets can be tracked on digital ledgers and allow for a much more standard and verifiable reconciliation process that hopefully removes a lot of third parties that add time and sometimes errors into the process of reconciling transactions. The second piece is the immutability. So the inherent immutability of a digital ledger and how that instills more security and trust in the end-to-end processing within markets. So, and then the cryptography and hashing. So the idea of hashing algorithms that allow you to verify the whole chain of custody of a given asset from its inception, and do that in a very efficient and automated way. So to me, those are some of the biggest underlying capabilities that have power within what they can enable for global capital markets. But I'd be remiss if I didn't talk a little bit about Bitcoin here, and I don't know, I'm guessing here in Northern Europe you hear just as much probably as we do in the US about kind of the FUD around BS or Bitcoin here. The interesting thing is Jamie Dimon, he actually does say that there's value in those underlying technologies, but that kind of gets drowned out by the other things that he says about the nefarious things that happen with Bitcoin. So I think I'm not going to talk about what nefarious or illegal things people might be trading in, or the fact that Bitcoin was, I think, somewhere around $11,600 per Bitcoin yesterday. But again, coming back to where we see value in those foundational capabilities that actually underlie parts of Bitcoin. So blockchain for us at Nasdaq, right now we primarily use chain as the underlying kind of vanilla blockchain capability to actually record transactions on a digital ledger. But what we provide is a Nasdaq financial framework layer that are kind of the common business logic for applications to interface with chain, but it could be Ethereum or it could be any other blockchain that might be invented tomorrow. And then we layer on applications for things like trading, settlement, e-voting, and many more here. So I'll give you a sense of some of the things we're doing. Private securities transactions, and then the Swiss exchange, OTC structured products. That's the big business values there are standardizing the reconciliation, reducing our errors, and then shortening the time to actually settle. And then the other three I'll speak about more. We have the proxy voting in Estonia and now in South Africa that was recently announced. And then some partnerships on the smart solar POC with a design firm called IDEO, as well as the Swedish mutual fund market. And I'll speak more about that one as well. So in the e-voting, as I said, we did a POC that was successful in Estonia and now recently just announced the South Africa Central Securities Depository. So what is recorded on the digital ledger there is the actual ownership of shares and then the voting tokens. And you can move voting tokens from one party to another proxy, and it's all tracked on the underlying digital ledger, which a lot of that is done manually right now. So this, again, adds trust and security and auditability into the whole process of voting. And Swedish mutual fund market. So this is really removing friction. There's many intermediaries in terms of how funds are distributed to end customers here. So this helps keep the reconciliation current, and again, simplifies it vastly and removes those multiple intermediaries. And it's kind of interesting to me here because we actually manage this process right now. So in essence, we are seeking to disrupt ourselves with this use case for the Swedish mutual fund market. And this is probably my favorite one. One of the earlier speakers talked about solar. This is a POC that was done almost 2 years ago now. And basically, it uses this, a device called a filament tap device, which is produced by a specific company that, and these tap devices have environmental sensors, so they can sense the DC power being generated. And then they have radio communication. They can communicate up to 10 miles in distance and kind of create these mesh networks. And they have cryptographic chips in them. And so the chips automatically record the energy being produced and write it to a digital ledger. And you think of how powerful this is, because the whole renewable energy credit business right now is built on kind of made up forecasts of energy production. And sometimes they're going out multiple years and they're really inaccurate. So, it's a bit of a sham, and like the ability to track that end to end in a very completely verifiable and secure way is pretty amazing when you think of how that could create out brand new markets that are much more effective. And obviously, global warming is a huge problem, or most people would agree it's a huge problem. So this is a pretty great and promising opportunity. All right, so this next one is probably one of my favorites, and we've heard a lot about machine intelligence today. So I don't know if I'll have anything to say that'll be really new, but hopefully I will. So I wanted to, when I thought about what am I going to talk about to the group about machine intelligence, I wanted to run a few experiments myself and see what is machine intelligence really capable of today, and what are some of the limitations. And so I want to introduce you to Piggy Sue. So this is a new family member that we just adopted about 2 months ago. And she's taught me a lot about pig brains and pig's ability to logically reason and to manipulate, I would say as well. But I'm not going to talk about that. I'm going to shift and talk about the Google Vision API, because that's a pretty powerful API created by who's one of my AI heroes, Fei Li, who heads up the AI lab at Stanford and also heads up AI at Google. And so we all think Google's pretty good. I think everybody would agree that Google is probably one of the companies that come to mind when you think about machine learning, machine intelligence, and AI. So I thought, let's feed some pictures of Piggy Sue into the Google Vision API and see what it comes up with. So with this one, it said pig-like mammal, 96%. It's like, okay, that's pretty good. And pigs down there, 89%. Snout, domestic pig, close up. So it's pretty good. I was impressed. Now this one is not Piggy Sue, but I wanted to get an idea of how it would do with sort of like a kind of obvious but not completely obvious picture. So I think most people could tell that this is a pig being walked. I'm not sure, that's probably not that normal, but anyways, I thought, well, okay, it's still kind of close though. Cattle-like mammal. It's some sort of mammal that's on on a leash. So, okay, get ready for this one. Okay, so this is where it really kind of missed the point. So it says pink, snout, dog-like mammal, but I think most people, probably even a 5-year-old could say this is a pig that's, dressed up. And again, we don't know why, but we can, I think most humans could figure that out. So I think where I was going with this is that where machine learning, machine intelligence, and AI is doing quite well is for more routine type analysis where we have a very large data set. But in the more longer tail of unusual but important things, or things where you might require a little bit more reasoning to make sense of it, we're still challenged. And I want to offer my perspectives on AI versus MI. Again, there's many definitions, but I think of machine intelligence as algorithms that get smarter without human intervention by being fed more and more data over time. Whereas artificial intelligence kind of layers on cognitive capabilities, decision making, and logical reasoning. So just to give a sense of companies, most companies today say they're thinking about it, they're strategizing, but they're not really there yet with AI. But they're putting a lot of focus there. Some of the things that we're doing here, I'd say we take a multi-pronged approach of working with other partners like Digital Reasoning and Lucena and Arimo, as well as organizations like Google and MIT. And I think one of the previous speakers was also talking about the importance of everybody learning about machine intelligence, and that's something we're striving to do at Nasdaq, is make sure everybody across the whole organization has a good working understanding of what's possible and can participate in the innovation process. So I want to talk about we're using machine intelligence across all of our lines of business. You can see most of our use cases are supervised learning, which really simply means that the output data is known and labeled, and you can train models to predict outputs over time. Whereas unsupervised learning is really the ability for the discovery of patterns in the data that is unlabeled. So I wanted to mention this one here, and it's relevant being used in the Northern European markets, but our market surveillance products, looking at scoring of alerts to decide what looks like an issue from a surveillance perspective that needs action on it. And this is a tree-based model. So basically, as you go further into the tree, the branches become more homogeneous and they're more heterogeneous to each other. And this learns based on labeling looking at the labels that the actual surveillance analysts put on data, and then predicting over time how a given alert should be labeled, and it's saving a lot of time for those surveillance analysts so they can just focus on the alerts that are most likely to be acted on. And the other one I wanted to highlight here, just because to me this one's interesting, this is more of an unsupervised learning example. So this is a product called Trading Insights that is to help customers create better trading strategies and discover new liquidity opportunities in the market or reduce latency. And it takes two different approaches to unsupervised learning. The first one is the purpose is one of the purposes is to allow customers to be able to compare their trading strategies and their success with other peers by benchmarking. And this uses a k-means clustering, unsupervised machine learning algorithm that, because what we found was you can't just put people in buckets like, you can't put them into a bucket to say, oh, it's a proprietary trading desk or it's a large bank. We found there was a lot of overlap there. So by doing this unsupervised learning to cluster, we were able to better compare them to their peers. And then last, the dimensionality reduction, which uses this principal component analysis, which basically allows you to discover in the data what are the most important dimensions of that data to look at based on the variability in the data. And we have trading data that's many, many terabytes, and there's 40 different dimensions to it. So it's really important to allow traders to simplify that so they can know what are the most important dimensions for them to be looking at and incorporating to their trading strategies. So those are a few things happening in the wild, and I think I'm right on time.
Yeah, you are spot on. Thank you very much, Heather. Don't go yet.
Okay.